Hi traders, this is Gomathi Shankar. I am very happy to meet you all in a new video. In this video, we are going to review Banknifty for the month of June, and also we are going to discuss about the trade plan for the upcoming month, July. So if you have not yet subscribed to my YouTube channel, hit that subscribe button and turn on the bell notification. And thank you all for your love and support towards my YouTube channel. Share the videos to all your trading circle. To give you all a better understanding about past month review, what I am going to do is I have opened Banknifty in 3 different tabs. So in the first tab, you can see daily chart of Banknifty along with monthly CPR. And in the second tab, you can clearly see this is hourly chart with weekly CPR. And in the final tab, you can clearly see this is 5 minutes chart with daily CPR. So using these CPR levels, we are going to review the past month. We all know very well the market was weak after January. Only in the month of Jan, the market was super bullish. And after that, from February, the market started to become weak. Even in the month of January, the first half was bullish and then the market was weak. In the month of February, the prices were trading around monthly R1 and then the prices came down. And in the month of March, the prices were trading below monthly CPR levels. And in the month of April, the prices were trading above R1 and they came towards monthly CPR. Again, in the month of May, the prices were below monthly CPR and they came down. And once again, in the month of June, the prices were above monthly CPR and the prices came down. So if we observe the market right from the month of February, the prices has been stumbling towards the downside. So the market was weak across the globe. Now in the month of June, initially for 3 days, the prices were sustaining above monthly CPR. Now we can clearly see on 1st of June, 2nd and 3rd and 6th June, only these 4 days the prices were trading above monthly CPR. Now what I am doing is I will look for long opportunities only on those 4 days, and between these days 7, 8, 9 I will not take any position because the prices are inside monthly CPR. And from 10th of June I will be looking only for short opportunities. So when you use daily chart with monthly CPR, the overall trend for the entire month is clearly visible for you. And that's why always it is advisable to open the monthly CPR with daily chart at the start of the month and prepare yourself for the overall trend scenarios. Now I'm going to check the market on 1st, 2nd and 3rd of June. And I'm going to explain you where I took my long entries. Now in the month of June, the first 3 days I have marked a zone, and that zone I am going to check in hourly chart with weekly CPR. And here you can clearly see 3 days the prices were trading above weekly CPR. So the prices are above monthly CPR, I am bullish. The prices are above weekly CPR, I am bullish. And now I need a important confirmation from daily CPR, because I am going to buy options. I am going to take long position in futures of Banknifty. So I am going to check daily CPR, because for an intraday trader, for a scalper, daily CPR is very, very important. So these two confirmations, weekly and monthly CPR being bullish, is a added advantage for me to take long position on a smaller time frame. So now I am coming to June 1st and I'm going to look at the trade opportunities which I got. So now you have to remember an important point. Since the prices are above weekly and monthly CPR, I will look only for long opportunities in 5 minutes chart with daily CPR. So here you can clearly see the prices were taking a good support at daily CPR. So what I'm going to do is I'm going to take a long position when the prices are coming out of CPR and my stop loss is going to be below CPR. Remember, when the prices are breaking R1 and previous day high, you can take a long position and that is a high probable trade. Whereas when the prices are coming out of daily CPR or when the prices are bouncing from daily CPR, you can take long entry, but that is considered as a low probable trade because the prices are trading below previous day high and above daily CPR. So this is like a zone. We are calling it as a low probable trade because the market is stuck inside a range, previous day high and daily CPR. Whereas when the prices are breaking R1 and previous day high, that is a high probable trade because the market is breaking previous day high and there is a fresh momentum in the market. Hope you understood. So on this particular day, June 1st, I will focus only on long opportunities, and that too, these are the areas to focus on your long opportunity. So when the prices were coming above daily CPR, when the prices are bouncing from daily CPR, these are the zones for taking long opportunity and place your stop loss below daily CPR. So somewhere around here you can place your stop loss and your target is going to be, your first target is going to be previous day high R1 zone and daily CPR 50% level. So always make sure you do a quick scalping when you enter at daily CPR. When you are entering at R1 previous day high breakout, you can stay in the trade till R2 or you can exit at R1 R2 50% level. When R1 and previous day high is broken, there is a fresh momentum, so you can stay in the trade. But when you are taking an entry at daily CPR, that is a low probable trade, so you have to exit at 50% level of R1 previous day high and daily CPR. So here, if you have taken an entry and if you have exited at 50% level, then that is a good entry point. Now in the afternoon, the prices are coming below daily CPR. Will I take a short opportunity? Definitely not, because the prices are above weekly CPR. Remember, the prices are above weekly CPR and the prices are above monthly CPR. So you should not take any short position in 5 minutes chart when the prices are coming below daily CPR. On the next day, 2nd of June, what I will do? On 2nd of June, as I said, for the 1st of June, when the prices are coming above daily CPR, I will build my long position with stop loss below daily CPR, and my stop loss is hit in this trade. After that, I will not take any position. Maybe I will take another long position here, and in this trade my stop loss is not hit, but the market was staying in a range bound manner. So on 2nd of June, there is nothing much to do. The prices were just roaming around the CPR levels. Remember, CPR is home for the candles. 3rd of June, what I will do? On 3rd of June, you have to understand one important point. We experienced a huge gap up market. Now on 3rd of June, I will take a short position though the prices are above daily and weekly CPR and monthly CPR. The reason is the prices were opening above R2, but none of the candles sustained above R2. None of the candles were showing bullish strength. You can see a lot of candles were showing signs of bearishness. So what you would do when the prices are coming below R1 and previous day high, that is the area we have to take a short position. If you are taking a short position at R2, it is risky. If you are taking a short position between R1 and R2, that is also risky, because there are higher chances the prices will take a strong support at R1 and previous day high, and there are higher chances the market will rebound. So if you are taking a short position as per gap up strategy, or if you are going to take a short position in this kind of scenario, you have to take a short only when the candles are coming below R1 and previous day high. Your stop loss will be above R1 and previous day high, and your target will be daily CPR. This is a risky trade because the price is above daily CPR and the price is above weekly CPR and the price is above monthly CPR as well. See, on 3rd of June, the prices are above monthly CPR. So we have to be a quick scalper. Enter a trade, place your stop loss, place your target, and quickly you exit. On 6th, 7th, and 8th of June, we can clearly see the prices were inside monthly CPR. So, as per monthly CPR, the direction is not clear. As per daily chart, the direction is not clear. Because when the prices are inside monthly CPR, anything can happen. The market can go up and bulls can prove their strength. The market can come down and bears can prove their strength. So the direction is not clear. We can decide the direction only with the help of weekly CPR. And in weekly CPR, we can clearly witness on 6, 7 and 8 of June, the prices were below weekly CPR. So when the prices are below weekly CPR, it clearly denotes that the market is becoming weaker. Alright. So what I will do, if the prices are below daily CPR, I will go for a short position. If the prices are above daily CPR, I will avoid long position. Why I will avoid long position? Because the prices are below weekly CPR. Alright. So now let us quickly see. Now on 6th of June, the prices are below daily CPR. So I will go for short position. Now what are the areas I will take a short position? I can clearly see this is previous day low and this is S1. So the distance between, this is S1. So the distance between previous day low and S1 is very big and the CPR is also very, very wide. So I have to be very cautious. The market might be range bound and S1 previous day low is not broken. So I will not take any short position. Even if I am taking any short position here, my stop loss is going to be very big because whenever I am taking a short position or long position at daily CPR, I have to keep my stop loss above or below daily CPR. So in this case, my stop loss is not favorable. So I am not going to take a short position. Alright. Now on 7th of June, S1 previous day low breakout is happening. Now the market is opening below S1 and previous day low. Can I take a short position in the first candle? No, it is risky. Because when you take a short position in the very first candle, there are lot of chances of profit booking and there are lot of chances of the institutional players taking the price a little bit higher and then they will sell call options. So a lot of major events will happen as soon as the market opens. So as a retail trader, we should not enter at the opening market. Let us wait and let us look at the clear direction of the trend and then we will go with the flow. So as per this logic, I am not going to take a long position because the market is below daily CPR and the market is below weekly CPR on 7th of June. So what I will do, when the prices are coming below S1 and previous day low, this is the area I will take a short position. My stop loss is above S1 and previous day low. My target is RS2 and my target is hit. Now, can I take a short position when S2 is broken? That is up to your risk appetite. You can take a short position, place your stop loss above S2 or S2, S1 50%. You can place your stop loss and you can aim for a quick scalping till S2, S3 50%. So that depends on your risk appetite and that depends on your experience as well. On 8th of June, what I will do? The prices are above daily CPR, but the prices are below weekly CPR. Look at the 8th of June. The prices are below weekly CPR and the prices are inside monthly CPR, but the daily CPR is going up. Since the prices are below weekly, I will not take a long position on 8th of June. I will avoid long position if sometimes I am unable to resist taking long position. Sometimes looking at these huge bull candles, we tempt to take a long position, right? So in that case, what I will do, I will deploy only 20% of my capital. Let's say my capital is 1 lakh rupee, for example. then I will deploy only 20,000 to 25,000 in this particular trade. If the setup is a high probable trade, then I will be happy to deploy 50 to 70% of my capital. I will advise beginners and retail traders to avoid these kind of sudden rallies, because it will be a trap, and you can clearly see the market started to come down. Now what I will do, when R1 and previous day high is broken, I will take a short. My stop loss is above R1 and previous day high. My target is daily CPR. My target is done. So this is how you have to look at the market, and you have to focus only on high probable trade opportunities. From 10th of June, the prices started to come below monthly CPR, and after 10th of June, throughout the month, the prices were below monthly CPR only. So we can discuss with the weekly CPR. 10th of June till 17th of June, the prices are below weekly CPR. So if the prices are below daily CPR, I will look for short opportunities. If the prices are above daily CPR, I will avoid long opportunities. Very simple. Now on 9th of June, we can take short position here, because S1 previous day low is broken. Don't forget to place your stop loss at 50% level. Remember, I have said a lot of time, if S1 and previous day low are very closer, then you can place your stop loss above S1 and previous day low. If S1 and previous day low are having a distance between them, then you have to use 50% level as your stop loss. So in this trade, my stop loss is hit, and then the market is going up towards daily CPR. I am not going to take any long position. 10th of June, S1 and previous day low is broken. Obviously, you can take a short position, because the prices are below daily, weekly and monthly CPR, and the prices are breaking S1 and previous day low. Strong confirmation of bearishness. Take a short position, place your stop loss at 50% level, and place your target at 50% level. And then if you are ready to wait, then you can exit at S2 level. On 13th of June, on Monday, the prices are below S4 levels. So obviously we cannot take any short position or long position, because it is like a panic situation. We don't know what to do. We don't know what will happen, whether profit booking will happen or whether the market will crash further. We don't know. So obviously on 13th of June, everybody should avoid. Now on 14th of June, as I said earlier, if the prices are going towards daily CPR, I will not take long position. Now here S1 and previous day low is broken. Will I take a short? Yes, I will take a short position. My stop loss is hit. And when the prices are coming below daily CPR, I will take a short position. My stop loss is above daily CPR. My target is 50% level, my first target. And finally, my second target is S1 and previous day low. So 14th of June is a awesome day. And now on 15th of June, we can clearly see the market is stuck inside daily CPR. Maybe I would have taken a short position here and my stop loss would have been hit. Okay. After that, I would have avoided any position, because the market is completely inside the daily CPR range. So definitely I will avoid after that particular morning stop loss. Now on 16th of June. So if you listen carefully, 16th of June is very much similar to 3rd of June. On 3rd of June, what happened? The prices opened above R2. There is no signs of bullishness. When R1 and previous day high is broken, I will take a short. Before that, I will not take a short. So same thing happened on 16th of June. So you can see here on 16th of June, the prices are opening above R2 levels. There is no signs of bullishness. I will take a short when R1 and previous day high is broken, with stop loss above R1 and previous day high. My target is going to be daily CPR. And when daily CPR is broken, again you can enter a new position with target of S1 and previous day low. On 17th of June, it is a range bound market. Obviously, we should avoid, because after a trending market on 16th of June, we cannot trust the market on the next day. The market is stuck between S1 and previous day low, and the market is stuck inside a range. So no trade on 17th of June. As I said earlier, the rest of the month, the market is below monthly CPR. Now I'm going to check weekly CPR after 17th of June. On this particular week, on 3rd week of June, the first day alone, on 20th June alone, the prices was below weekly CPR. and after that the prices were above weekly CPR. What I will do is I will draw a zone at weekly CPR so that it will be easy to see in daily CPR levels. So this is 20th of June. So on 20th of June the prices are below weekly CPR. So what I will do, if the prices are coming below daily CPR, I will go for a short. So obviously I will go for a short here. My stop loss is hit. After that I will not take any short position. After that the market is once again breaking the daily CPR after 2:30. After 2:30 I am not going to take any position. So after one stop loss I am going to exit this particular day and I will not re-enter again. Now on next 21st June the price is coming above weekly CPR. The price is above daily CPR. I said you earlier, if the prices are coming above daily CPR I will take a long. That is a low probable trade. If prices are breaking R1 and previous day high, I will take a long. That is a high probable trade, I told, right? Now same strategy applies in weekly CPR with hourly chart. In weekly CPR, if the prices are coming above weekly CPR, that is a low probable trade. Focus on a quick scalping till previous week high and R1 or even till 50% level and exit quickly. If prices are breaking R1 and previous week high, then that is a high probable trade. So as per that logic, the candles are coming above weekly CPR. I will look for a scalping only till this 50% level. The market is above daily CPR and this is the weekly CPR zone. The market is above weekly CPR. So I will take a long position here. And I will place my stop loss maybe below weekly CPR or below R1 and previous day high. So this is going to be my stop loss. And my target will be R2 initially. This will be my target 1 and then 50% is going to be my target 2. After that I will exit. I will not stay in this trade for a very long time, because as soon as the market reaches previous week high and R1 zone, anytime the market will reverse. You can see that in 5 minutes chart, the market reached previous week high and R1 level and quickly there was a reversal. So when I am entering here, my job is to exit as soon as possible, not to remain in the trade for a very long time. The next day you can see the prices are below daily CPR, but the prices are inside weekly CPR. Moreover, S1 previous day low is not broken. The market is dead sideways, so no trading at all. Now the next day, 23rd of June, same trade opportunity like 21st of June. The market is above daily CPR and the market is above weekly CPR, right? So we can enter a trade when R1 previous day high is broken. My stop loss is below R1 previous day high and my target will be R2, because the target is very closer only. R2 is going to be my first target. R2, R3 is going to 50% is going to be my second target, and I am done. Now in this case, I will not take short position here because the prices are above weekly and daily CPR. I will not take any short position. I will focus on long position only. If I am taking a short position, I will take a short here because daily CPR and weekly CPR is broken. So I will take a short there and I will quickly exit at S1 previous day low level, because that is going to be my first target. If you want, you can take a long position at R1 previous day high once again and you can exit at R2. That is big, depends on your risk appetite and experience. Now here the prices are above daily CPR, the prices are above weekly CPR, and the market is dead sideways inside a range. Obviously no trade zone. The market is above R1 and previous day high already. So no need to take a position based on R1 and previous day high breakout. Already the market is above R1 and previous day high. So we have to wait and watch whether the day high is getting broken, whether R2 is getting broken. That is how we look for long opportunity, not in a range bound market like this. So what happened in the last 4 days? So again, I will draw a zone at weekly CPR. You all know very well, already the market was below monthly CPR. Remember, don't forget, already the market is below monthly CPR. And now I am going to check this in daily CPR. Now The candles are above daily CPR, the candles are above weekly CPR, so we can avoid short position. Now you have to note down one important point. Already the market is weak for nearly 4 to 5 months, so anytime you can look for short opportunity. Even on these days when the market was above R1 R2, when the market was above daily CPR and weekly CPR, I went for short position personally, because the overall market is weak. Global markets were weak and our Indian markets were weak. So because of this factor, I went for short position even though the market is above daily CPR and weekly CPR. Now what I am trying to tell from this review is, especially for beginners who should follow the rules of trading strictly, because you are a beginner, you need to gain a lot of trading experience, you need to build your confidence, you need to build your capital, and you need to build some positive attitude and thoughts regarding trading and taking trading as a full-time career. So you have to focus on high probable trades. We are taking risky trades, and don't try to mimic us. Okay, that will be risky for you because you are a newbie, you are an amateur trader. So whatever I tell in Bank Nifty review is purely intended only for beginners, not for experienced traders, because experienced traders, we have our own trading style and we follow that religiously. So what I will tell on this particular day is, prices are above daily and weekly CPR, focus only on long opportunity and avoid short position. So there is no trade on 27th of June. Now on 28th of June, the prices are above weekly CPR, but the prices are below daily CPR. So in this case, what I will do, I will avoid taking any position because the direction is not clear. If the prices are coming above daily CPR, I will plan for long opportunity. But if the prices are below daily CPR, no, it is a point of confusion. What should I do? Whether I should take a short position or whether I should take a long position. But few traders applied S1 previous day low breakout, and they texted me personally telling that they made some money. So you can do those kind of trades, but make sure you exit at the target at the right time. Okay, so on 20th June, it is a point of confusion, stuck between daily and weekly CPR, and the direction is not clear. Now here and all, we were seeing the prices are above daily CPR and weekly CPR, the prices were above daily and weekly CPR, we saw those points. But here the price is stuck between daily and weekly CPR, so there is a point of confusion. Whenever you are confused, don't take any position. That will be the best advice. Now on 29th of June, the prices are inside weekly CPR. Again, it is going to be a range bound market, no direction at all, no proper clarity in the market. All right, so on 30th of June, yesterday, the prices are above daily CPR, the prices are above weekly CPR. You can take a long position somewhere around here, but make sure you exit at the right target, that is somewhere around R3. And after that, Virgin CPR reversal started to occur. So this is Virgin CPR. Exactly at Virgin CPR, the reversal is happening. Now, can I take a short position in this Virgin CPR reversal? Of course you can take, because your stop loss is going to be above Virgin CPR and your stop loss is less. And moreover, Virgin CPR works well if there is a good setup like this. There are many days the market doesn't respect the Virgin CPR and Virgin CPR goes in vain. But this particular day, the Virgin CPR gave a perfect resistance for the market, and there was a strong rejection candle. The market was rejecting at Virgin CPR as well as at R3. So what you are going to do, you are going to take a short position and you are going to place your stop loss above R3. So your stop loss is very small and you are going to take a short position. So this trade is purely based on Virgin CPR only. After that, you can take a short position here because R1 and previous day high is broken, and you can aim for a target of daily CPR, but your stop loss is hit because the market was too volatile because of monthly expiry. So on this particular day, are you taking a long position because the prices are above weekly and daily CPR? Yes, that is a right trade. Are you taking a short position based on virgin CPR? Yes, that is also a right trade. Are you taking a short position when R1 previous day high is broken? Yes, that is also a right trade. All right. So this is what happened in Bank Nifty in the month of June. Now, what can we expect for the upcoming month, July? Now, in the month of July, already the first candle is below monthly CPR. So this is going to be July. The prices are already below monthly CPR. So as I said in my review just now, if the prices are below monthly CPR, I will focus on short opportunities. If the prices are coming below weekly CPR and if the prices are coming below daily CPR, if the prices are above daily CPR and if the prices are above weekly CPR, then I will focus on long opportunities for a quick scalping. In the third week of June, we experienced this pattern. Prices were above daily and weekly CPR. We went for a long till the prices reached weekly R1 and previous week high. So we went for a long, right? Because the prices were above daily and weekly CPR. So we will apply the same strategy. If the prices are above daily and weekly CPR, we will take long, but we will exit as soon as possible once the market reaches previous week high or weekly R1. If the prices are below weekly CPR and daily CPR, you have to take a short because the market is still below monthly CPR. So that's it, guys. I hope you loved this review, Bank Nifty review after a very long time. Please show your support in the comment section. If you like this video, please share it to your trading circle. Together we grow as a price action trading community. Thank you. Bye.